Good morning, everybody. We have a lot to go over this week, so let's get to it. I was listening to talk radio in my car last week, and some caller phoned in and said, "It's capitalism. Corporations should only be worried about shareholder value." Yeah, I get that, and I understand that responsibility and that obligation for a company to its shareholders. With that said, I do believe we have a mismatch right now between incentives and consequences that maybe have distorted capitalism somewhat. So let's give you a couple of examples. In my world, Walt's world, we have a lot of money managers who call themselves hedge fund managers. All right, so what's the incentive system for a hedge fund manager? Well, how do they get paid? It's called 2 and 20. So let's just pretend you're really big. You've attracted, I don't know, let's just $1 billion under management. You're charging 2% flat fee to manage that money. So 2% of $1 billion is $20 million. That's pretty good. But then you get 20% of the profits. So it's called 2 and 20. Well, if you're a hedge fund manager, what would you be encouraged to do? Swing for the fences, baby. I mean, you're going for as much profit as you can. And if you lose, you're still getting your two. So what's the incentive? To take as much risk as you possibly can. Your risk is to cut corners. Your risk is to go into gray areas where maybe you can make some more money. And if there's no consequence, either from the regulators or from legal systems or financially, you will be incentivized to actually put larger systems at risk in the name of capitalism. All right, let's look at our political system. We've got clearly politicians, I believe, engaged in insider trading, which they say they've made legal. But the fact of the matter is, they get to act on information that you and I don't have to enrich themselves, and I would say at our expense. But there's really no consequence to it because it's legal. And we somewhat have a donor system where the team with the most money wins in most elections, especially for incumbents. Well, that breaks down trust in our political system, which has systemic effects on the society. I'll do one last one. Let's go back to the collapse of Lehman Brothers back in 2008. And we're actually currently our banking system today. The system is set up where the banks borrow, 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 they lever up. And if there's a mistake, like we saw with Silicon Valley Bank, what, 2.5, 3 years ago, who eats the losses? Well, it wasn't the bank, and it wasn't the people who had their money with the bank who were profiting. The tax holders, I mean, the taxpayers, we ate it. So what we have right now is an imbalance between the incentives of capitalism, which I want. It's okay to swing for the fences, but if you lose, you've got to have the consequences. So where is this showing up? I think what's happened is we used to have the economic financial system embedded into the society. Right now, we have the society is embedded into this massively large financial and economic system. It's upside down. And where is this showing up? It's showing up in the gap between the rich and the poor. And I'll close with this. Let me just show you this. I'm not sure you can see this real well. The rising wealth share of the top 1% over the last 35 years. So I hope you can see this. But all right, in 1989, it was still pretty high, but the top 1% held 22.8%, almost 23% of the total net worth. Well, look what's happened since. Go down to 2024, it's almost 31% of the net worth of the wealth is held by the top 1%. And then read the bottom part. In 1989, the bottom 50% held 3.5%, well, whoop-de-doo, of the total US net worth. But look at today. 2.8%. What we've got is this widening wealth gap in the society, and the resentment grows. And this is what the uber wealthy really don't ever understand is why are they so mad at us? We're just doing capitalism. Well, it's kind of capitalism, except without the consequences. So you know what Walt and I try to do. Oftentimes we'll link war with the economy, or we'll link politics or geopolitics. On a rare stupid occasion, when I try to link religion and the economy, that's usually kind of dumb. I avoid that now. When we start thinking about the entire society and this economic system, what's going to happen here? The incentives are there for this to continue, at least for now. Will it go on forever, or will there be consequences down the road for what we've done? Consequences are coming. That's just a nature thing. The consequences will come where the imbalances are the greatest. Those imbalances are in the world of finance, papery type assets where the incentives have been the most out of balance. This is one reason, well, one of the main reasons, why Walt and I have you positioned in an area that really hasn't lived in that world. There are hard consequences to mismanaging hard assets. It's not to say that that area is totally free of the incentive versus consequences mismatch, but it's much smaller, which is one of the reasons why you are there. So with that, I'm going to turn it over to Walt, who for some reason, I asked him about this, he wants to talk about fungus today. So with that, I will turn it over to Walt.